And benchmark Treasury yields inched up from yesterday's 11-month lows, with the 10-year trading at 2.47%. So what gives? Why are stocks at or near record highs after the economy shrank for the first time in 3 years last quarter? How different is the current quarter, and are economists counting on even more growth over the year ahead? Steve Leisman has more.
The unexpectedly sharp downward revision to first quarter GDP to a full percentage point decline actually prompted economists on Wall Street to grow more optimistic about the second quarter. On average, economists raised their forecast for the current quarter by 0.2 of a point to a strong 3.7%. The reason? The negative number appears to be mostly the result of harsh winter weather. The downward revisions came because of much lower inventories. Turns out businesses kept a lot less stuff stocked on their shelves in the first quarter, and they're going to have to restock now.
Part of that negative is the weather, for sure. But if you think about what the bounce back's going to be in the second quarter and average that to the first, you still get a growth rate that's less than 2%. So I think that's a disappointment compared to what many people were thinking before, and it's sort of a continuation of this unfortunately slow recovery.
A big drop in unemployment insurance claims reported today to just 300,000 bolsters the bulls' case for near-term strength in the economy and the job market. The bigger question being debated is what happens after the bounce back, and the decline in yields for 10-year U.S. government debt to around 2.44% has some believing that the bond market is sniffing out weaker growth ahead.
I think the leading hypotheses are that, the fall since the beginning of the year reflects an appreciation that maybe the surge in growth we got at the end of last year isn't going to be sustained over the next couple of years.
Next week, investors think the European Central Bank could take additional action to stimulate their anemic economy. That could give a boost to U.S. growth and help make the bounce back more than just a one-off blip. For Nightly Business Report, I'm Steve Leisman.